During periods of turmoil and elevated risk and fear, innovation actually gains more traction faster. We are not in a bubble. We're in the period of reality. The seeds are beginning to flourish.
Hi, welcome to the video. Today we are listening to Cathie Wood talk about the recent volatility, skepticism, and also topics of retail versus institutional investors. The market is making a lot of people nervous, but Cathie is not worried. I've edited a small part of this from the full 41-minute presentation, which I highly recommend you watch. I'm only going to interject when I think there's a point that could use some clarification. Otherwise, this is a condensed version of some key points that I think will ease some of people's worries. The topics will include why institutions miss Tesla, the issue backwards-looking benchmarks-based thinking has, the unique advantages ARK has based on their transparency, and finally, why Cathie is not worried about us being in a bubble. A lot of her thinking mirrors how I feel, which is why I'm holding a majority of my growth stocks. Even if you don't agree with every company she's invested in, I think there's so much to gain from her transparency and how she thinks. Without further ado, let's listen to what she has to say.
There is a big difference between the way institutional investors look at investing and retail investors. The Tesla example is a good one to illustrate the differences. A lot of institutions are not set up actually to analyze a stock like Tesla. And the reason for that is after the tech and telecom bust, and then on top of that, the 08-09 meltdown in the equity markets and the bond markets, there developed a lot of risk aversion, and volatility became a bad word. We have a volatile strategy, and we use that volatility to our benefit, trading around positions. Volatility is not a bad word in a bull market. Institutions tend to be very benchmark sensitive. Tesla, as you know, many of you know, did not enter the benchmarks until last fall. And we're happy that institutions are joining us now, but they're joining us primarily because Tesla entered the indexes. I'm not sure they really are trusting this. And the reason for that is their auto analysts tend to follow the traditional auto industry. And the traditional auto industry is very mature. And now there's a transformative, really revolution taking place that will alter the auto world completely. There was a lot of skepticism. The auto industry itself didn't expect electric vehicles to amount to much of anything I think, they thought it wouldn't take until the mid-20s. Well, it's here. That kind of tug of war between the traditional backwards-looking world, which is based on benchmarks. Benchmarks are where they are because of past performance. ARK is focused on the future, especially on the future that involves transformation.
In my previous video, I talked about how Tesla is actually opening up its full self-driving beta program. Only a very small amount of people have Tesla, and even smaller amount have experienced what a full self-driving capable car is like, but it exists now. It is going to completely transform the way we move around society and society in general. I don't think people are aware of it yet, but it's here. It's as revolutionary, even more revolutionary probably when the first iPhone came out, where people were looking at this touchscreen thing and saying, why would we want to, use this? Buttons are so much more tactile. They feel better to use. Or right now, I'm sure there's going to be a lot of fear regarding why would we trust a machine to do our driving? We want to drive ourselves, right? There's going to be a huge shift coming.
The other difference between what ARK is doing, what a lot of retail investors focus on, is time horizon. I know that institutional investors are much more short-term, many, not all. So this idea of being graded every year based on how well an analyst or portfolio manager did relative to a benchmark is quite constraining. The luxury we have, and retail investors have, we have a 5-year time horizon. That is a luxury. That's a luxury. And the difference between linear growth and exponential growth in the early years, when electric vehicles are at 500,000 a couple of years in sales globally, last year 2.2 million. In those early years, because the bases are so low, there doesn't look on a graph to be that much difference between linear growth and exponential growth trends. You give that a few more years, and the difference is quite surprising. I mentioned that 82% growth rate. We really believe that's going to happen, especially now that China is pushing hard. I don't think traditional auto analysts still believe that could happen.
So Cathie, as a fund manager, she needs to produce a certain amount of results, probably within certain timeframes still. Us, as retail investors, if we're just investing for ourselves, we could hold on to a stock forever. We can see the stock dip all the way down to zero, all the way back up to 100, back down to zero, and no one is going to fire us. So she's just reminding us that it's a luxury to be able to have these much longer time horizons. And when you are investing, you have to be looking at things from longer time horizons, especially if you're looking at a growth stock. Because if you look within a small enough time period, you would not be able to tell the difference between linear growth and exponential growth. You can only see if it's an exponential growth company once you're at 5 years, 10 years. Being too obsessed with the monthly or even yearly fluctuation of a stock is not painting an accurate picture of what's happening.
The third issue that institutions are grappling with, that we are not, and that retail investors are not, is that the analysts are very siloed and specialized by industry or sub-industry or sub-sub-industry. The problem with that is these new innovation platforms around which ARK has centered its research and investing are cross-sector in their ramifications. So it is the platforms that we have centered our analyst responsibilities on, and they are generalists, and all of them are comfortable with technology. You do not find that in institutions, and I truly believe that research departments in institutions will have to reorganize in order to invest successfully or optimally, shall I say, in innovation going forward. The platforms are converging, so it's getting even more complicated. Autonomous taxi networks involve 3 of our platforms. And you've heard me say this before, but some of you may not. Autonomous vehicles are robots. That's one of our platforms, robotics. They will be electric, so energy storage, battery pack systems, another one of the platforms evolving out there. And they will be powered by artificial intelligence, another one of our platforms. It is very difficult in a traditional institution, which is very siloed, to have analysts collaborate in that way. They haven't been set up to collaborate. Our analysts are all about collaborating. So the world is changing. We are sharing our research on social media so that we can engage with and become a part of the communities that are innovating. We are receiving insights, I believe, because we're willing to share our research. We're receiving insights about our research from those in the field.
This is an advantage I never thought about, but it's something that benefits everybody, and that's their transparency. ARK has changed the game not because they were right, and that still remains to be seen, but they changed the game because they were so transparent, because we could see how they are adjusting their portfolios every day, because Cathie has given us so much access to her and her way of thinking. On the flip side, this is also a huge advantage to ARK because she has us, all of her viewers, watching exactly how she's thinking. And if she were to slip up or to do something wrong, now they have access to a million more minds. And this is something that most other funds have not done. ARK is on the forefront of this level of transparency.
We think that because of their focus on benchmarks, which is more about what has happened historically, the risk of the companies in their portfolios being disrupted by the new technologies is going to cause them to populate increasingly, we believe, with value traps. So we're a good hedge against the broad-based benchmarks.
That's the problem with these benchmarks. That's the problem with backwards type thinking. That's how you miss stuff like Amazon and Apple and Netflix, because there's nothing to compare it to. You have to be able to project what exactly is the problem that it's solving and how is it going to change the world. You can't just keep thinking about, well, I've never seen this before, therefore it's not going to work.
We're as excited as ever about everything we're doing. The last few weeks hasn't done anything except increase the returns that we expect from each of our stocks to the extent they've come down. It's only the market that has changed that because a 5-year investment time horizon, the research doesn't change. We haven't seen anything to change our research assumptions or conclusions. In fact, during periods of turmoil and elevated risk and fear, innovation actually gains more traction faster. The coronavirus was the best example I've ever seen of it. But even markets like today will, since we're still in a period of heightened risk around the coronavirus, will probably encourage decision makers who were maybe on the fence about a new technology to jump off and just say, okay, let's go.
Right now, a lot of businesses are suffering, but when you're pushed into a corner and you have no other option, that's when you are sometimes forced to be more creative.
I am never afraid of times like this. And just to address one other question, this bubble question, we are not in a bubble, is because the seeds of what we believe will happen during the next 5 years. So the seeds for all of them were planted more than 20 years ago in the tech and telecom bubble, and even before that, so the PC and the internet together. We're in the period of reality. The seeds are beginning to flourish. We are ready for prime time. That is what we truly believe. And so this notion of a bubble, I think, is born, once again, out of the benchmark sensitivity and backwards-looking nature of a lot of institutional investors out there. The other thing I'll say about this is what they should be worried about is not our strategies. They should be worried about their strategies because the other side of disruptive innovation is creative destruction. And when we're talking about the S&P 500, we think creative destruction is going to impact nearly 50% of the S&P 500. And there are hundreds of billions, if not trillions, of fixed assets out there that will be stranded.
Here, when she's saying that a lot of companies will be left stranded, she's referring to how they were doing business before and how it will become no longer relevant. So let's say you are a mall or all types of companies with physical brick and mortar presences. Those are assets that will no longer be of value. And a lot of companies in the S&P 500, they are going to experience huge chunks of their company essentially losing all of their value because they can't compete with the new types of companies, with the new innovations coming out.
We're looking forward to sharing with you more videos like this and probably focusing more on the exponential growth trends, just how powerful they are out there, how unstoppable they are if we're right. And then you will see how getting on the right side of change will be a very good idea.
And that's it for today. Let me know what you think about what Cathie's saying. Does she give you comfort in holding onto your stocks? Even though I have high conviction in my Tesla holdings and a bunch of my growth stocks, it's also stressful to see this much red. But at the end of the day, nothing has fundamentally changed. If anything, the bull cases for a lot of these companies are only growing. So I'm going to continue hold, but I want to hear your thoughts whether you agree or not. I always enjoy chatting with you guys. This is Green Knight Trading, where Squires become knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.